Hello, everyone, and welcome back. My name is Greg Furman, and this is the VantagePoint AI Market Outlook for the week of August the 2nd, 2021. Now, to get started this week, we're going to continue with our learning process of intermarket correlations and different strategies using the VantagePoint software. So, for this week's session here, going forward, we're going to be looking at these particular indicators. The 52-week look back indicator in the VantagePoint software, which I've modified to 31. I'll explain that in a moment. We're using bars, not candles, long-term predicted difference, medium-term predicted difference, neural index, point and time indicator, which again I'll discuss in a moment, our short-term predicted difference, our triple cross, and of course our verified support and resistance zones. Now, with these additional indicators, they will allow us to see the actual overall structure of the market and not get too caught up with short-term indicators. So when we look at the dollar index, by clicking on the most recent bar, what I can do is bring up all of my information here. I have my 31-week high, which is 93.43, my 31-week low, which is 89.20, then my price on open, which is 89.93, excuse me, and that would be very close to the yearly opening price. Now, these are very important numbers because they do provide market structure. So when we look at this, we can see that the dollar made its yearly low and its yearly high basically in the first quarter, and then it's just been kind of wandering back and forth ever since, not making any new highs, but not making any new lows either. So when we look at the structure of this, it shows us a channel that the dollar is running in and where Vantage Point is picking up on some of these signals with their predicted moving average crossovers and our predicted differences. So in this most recent move down in the dollar, we can see that the medium term crossing the long term predicted difference was a leading indicator when we combine it with these yearly tops. Now, to be clear, this yellow line that's coming down here is the yearly opening price or very close to the yearly opening price. So basically what I can do is say, pick a point in time at the beginning of the year, January 1st, where did this particular asset class open? So we can see that we're down here and I can very easily get that information. From this point, coming back in, I can then pull back into a 3-month period and get a better structure while still maintaining the key indicators. Now, when we look at these predicted differences, we're looking at not just the crossover point, but the potential change in the slope. Now, you've heard me discuss on many occasions about the dollar cycle. Now, in most cases, it's not very strong in the month of August, but the week of the non-farm payroll is usually when the dollar strengthens. But that is also usually a very short-lived move, usually about a week. What I've often said is the Tuesday after the non-farm payroll number, no matter how good that number is or how bad that number is, the dollar it usually sells off after institutional buying is done. So when we look at our key Vantage Point pivot areas, we can see that the T-cross long is 92.38. That now becomes our resistance to start the week because we've got a fresh triple EMA crossover forming near a newly formed verified resistance and the yearly high. So we can see the overall structure of the market. The neural index has gone from red to green, so that's warning that we're likely going to see some some strength in the dollar index at the beginning of the week. But also remember there's a holiday in Canada on Monday, so markets will be a little bit thin. Now, with that, we also click on our F8. We want to identify that key Vantage Point predicted moving average. Now, this is an excellent way to get some of the lag out of the market here. What I look for is the market to hold above this blue line to stay long and hold below this blue line, this predicted moving average to stay short. So we can assess here that once we crossed over, we had our 2-day rule that led to 3 days of a good strong move down. Now, the bar from Friday is very often what we see, or what I see, is profit taking. So always remember that if we've been long Euro US, long Great Britain US for the entire week, and then the market participants, they all start taking profit on Friday, just remember how the currency markets work, that when they close a Euro US long, they're actually buying US dollars back and selling the euros off. So again, that's where you get this profit taking in play. But for now, to begin the week, we have a couple of the main resistance area at the long predicted and the T cross long is sitting at around the, I'm going to round it out and just say 92.40. The dollar is still in trouble while it's below that particular level. Now, when we cross-reference this and we bring in those direct intermarket correlations, we can assess the top correlated market is obviously the ProShares Euro, and this is on the monthly, excuse me. So we're going to go out and we're going to look at the yearly. Let's use the yearly because it's the most reliable in these correlations. But the ProShares Euro, you can see these are all positively correlated: US Mexican peso, Singapore dollar, Israeli shekel, US Swiss franc, US South African rand. There's a number of different markets. Then you have inversely correlated markets that are starting at about 80% correlated, inversely correlated, which are equally as important. And we can assess what those are. So if the dollar slips and continues to fall, then a number of these currencies will go with that. That's what we look for. But the main correlations with the dollar index is going to be, believe it or not, Bitcoin is still at the top of my list. I'm watching that one very, very closely, but the inverse correlation to gold. So as gold has rallied over the last several weeks, that's been putting pressure on the dollar index, and this is what we want to make sure we're looking for. Now, one of the questions I was asked, a very, very good question I was asked last week, is is there a difference between correlation and causation, or cause and effect? I think that question is answered very effectively this week in the VantagePoint article on the US dollar index. So I will read a quick excerpt from that, which I believe answers that question better than what I could have. Intermarket analysis immunizes you from fake news reports in the media that offers scholastic opinions. That's the key word here, guys. Opinions disguised as facts. When you see the key drivers of price, you know that these statistical correlation puts the probabilities, overwhelmingly in your favor with the trading decisions you make. Now, that article was posted this week in the VantagePoint. It's a US dollar weekly asset study. I think that was a fantastic article, and that segment hopefully clarifies that question, because I think it was answered better than what I could do, better how than I could answer it. My view is that I am not interested in tracking any kind of impulse buying, selling waves. I'm interested in tracking repetitive patterns and institutional funds. And that's what has originally led me to study these intermarket correlations, because when the so-called experts repeatedly, or the academics, they're basing it on a black and white. There's nothing black and white about trading. There's a huge gray area that us professional traders work in, and we have to accept that. Where the academic doesn't always do that. He looks at the data and says, okay, this is going to be the outcome. No, that's very often is not the case. So I think that little excerpt from that very, very well-written VantagePoint article answers that question. So hopefully that makes sense. But that was the question, and it was a very good one. The difference between cause and effect and correlations, and I think that that's a very good starting point for us to get our head around. So the dollar to start the week, again, the indicators are absolutely bearish in the VantagePoint software. But again, we're starting to see a little of activity in this trigger. This pink line is a trigger. When it crosses over that blue line, it gives us an early warning sign of a potential shift in sentiment. So keep a very close eye on that. The other one we want to make sure we're looking at very closely is gold. So when we look at the gold markets, once again, if I pull it out to a 9-month period, and the reason why I've used 31 weeks and not 52 weeks is because I tend, each year there's a reset on January the 1st. That's why I put in a yearly opening price, and then I start gauging my ranges from there, because that's what the big funds base their performance on, a year over year. And then of course they make adjustments to that. But every year it starts a new performance track record. So when we look at gold, gold has not had a very good track record in 2021. That's obvious by looking at this chart. We've been below this yearly opening price the bulk of the year, but we have recovered, and we're trying to recover again here now. Now, when we break this down and we look at this, I can see that my price on open is 1885 because I'm going to get as close to that yearly opening price as I can. My 31-week high, 1957. My 31-week low, 1677. That puts us almost smack dead in the middle of the range here. So again, gold is trying to recover, but what we're going to do here now is again, then we bring it down into a shorter period to see where we're at. We can assess that we have a verified resistance high at 1832. I believe that we're failing here because once again, this past week, there was an epic battle going on between two heavy hitters, gold and Bitcoin. I believe Bitcoin got the best of gold a little bit, but only on the Friday. So I'm not going to put a lot of weight on that. I truly believe that what the future holds is that both of these two will go up and down together because they're very similar. The difference is the payment systems. And the amount of people, once again, when we talk about that fake news or academic opinion on things, they have repeatedly told us they've been just as negative to saying not to buy gold, some of them too, but they've been extremely negative on Bitcoin and they've been extremely wrong. Warren Buffett, I won't go into that. All I will say is that he has been adamant that he will never buy Bitcoin. Just remember, guys, he said the same thing about the Forex market, and that ultimately ended up making him a lot of money when those stocks didn't. So when I look at gold going into next week, we have heavy resistance here. My view is that if we can break through 1832, that is going to trigger a move back to that open price, the price on open, which is 1885. That's what I'm looking for, a bigger move back up to that area, and then we can reassess from there. The indicators from VantagePoint, we are holding above the T-cross long at 1809. That is our immediate support for this coming week. Our additional support is the verified support at 1792. That is then followed by 1752. I would need a breakdown below 1752 to take the pressure off the upside here. My view is that again, is that it would be perfectly normal for gold to continue to extend its gains into September. And then again, we will reassess at that time. The predicted differences have crossed to the upside. We are above the zero line. Once again, very important that we hold above that particular level. Now, if we do a comparative analysis while we're hot on the trail of this, and we look at Bitcoin Investment Trust or Bitcoin contracts themselves, so what we'll do is we'll come out and let's have a look at the actual market structure. The market structure here is a very interesting one because what we can assess is that our 32-week high on, again, the low, a 32-week low is 23,390, but our 31-week high here, guys, is 64,789. The price on open is that area that I've talked about, the Coinbase yearly opening price at 28,900. We're coming off that. Watching CNBC this past week on Monday, when they tried to explain this, they unfortunately they asked Jim Cramer, the question, and he had no clue. He was stumbling and stuttering. He had no idea why this thing went up. He said it's nothing more than a short squeeze. Well, that's an awful lot of short squeezes, isn't it, guys? So let's call this what this is. Support or demand. People are buying this thing down here, and those people include me. And I will continue to do that. Why this level holds. So again, if I'm looking at my price on open at 28,988, that is a basic supply and demand or support and demand issue. So the market is holding down here. I believe I discussed this last week, the exact when this move actually started by using that predicted moving average. This move actually started on July the 21st when we closed above that VP blue line, that very powerful predicted moving average. Our predicted differences were starting to rise. We had a solid neural index. Here's the problem this week, guys. We should expect some type of dollar strength because it's a repetitive pattern that's been identified. The resistance on Bitcoin is at about the 41,300 mark. So if we push above this, on say, for example, early Monday trade, I would be very cautious about continuing to buy this because we've seen the markets reverse. Whatever happens on Monday, it often reverses on Tuesday. So the resistance area is up here. And once again, when we combine the verified resistance zone, okay, with the Vantage Point predicted indicators, the trigger here, in my respectful opinion only, will be when that neural index goes from green to red. The MA diff is crossing down against a verified resistance zone. That is something we must be very cautious of buying around this area. Despite the fact where if we have a good move down here, but I've often stated that the further the distance gets between the blue line and the black line, that's not always a good thing, guys. That also could be warning that it's getting overbought here. And I'm not using standard indicators, stochastics, RSIs for gauging overbought and oversold. I'm going to use verified resistance highs and lows. These are the areas that we want to watch, and these predictive indicators. So basically what this is telling us right here is the medium term trend is weakening against the longer term uptrend. So we could be locked in this channel for another couple of weeks if we fail to close above this level. And to be clear, you get a lot of bull traps around areas like this. So don't think it's a free for all buying up here. I think we need to stand down on this one actually and wait it out until about Wednesday and see if we can actually penetrate through this very strong resistance level and clear it. I think there's a strong possibility, but my optimism on that remains heavily guarded because of that crossover. Now, once again, if Bitcoin does fall here, guys, then this makes these intermarket correlations all the more interesting to us. So these markets that are highly correlated to Bitcoin, 96%, you can see these ticker symbols. There's a whole bunch of stocks in here. Who would think that TripAdvisor has a 95% positive correlation to Bitcoin? Not me. I would never have guessed that in a million years. Or Manulife, or the Aussie Swiss franc, or the VSH. I wouldn't have guessed any of that. Now, the inverse correlation, meaning that if Bitcoin continues to extend, then this grouping here is likely to continue to move lower. Euro, Australia, there's a bunch of different markets in here, but the main thing is that we can identify them in the yearly. I can look at it from a quarterly perspective where you can see they all changed, and all of a sudden those yearly correlations were replaced with a whole bunch of digital currencies. And if I go down to the month, you see something very similar. So again, with VantagePoint currently taking the correlation to 31 other markets, I'm actually cheating here, and I'm going with closer to probably 40 to 45 intermarket correlations in the monthly, the quarterly, and the yearly. It can be very, very interesting from a learning perspective. So for now, we know where that key level on Bitcoin is, and we must be very, very cautious of that. Now, as we look at the S&P 500 going into next week, once again, the S&P is relentless in its move higher. Now, when we look at this again, from the perspective of this is what I don't really, which makes me a little bit nervous. The 52 week, or excuse me, the 31 week high, it keeps moving up. So number one, it tells us that it is bullish still. But I prefer this thing in a lot of different markets to make them rather sooner. So this high, they continue to make new highs, and it's I don't know how much longer we can keep doing this for. I'm not at this time going to try and predict it because you can see that my key level here, my price on open at 37.64, here is what I will say that I've seen almost every single year is that the further we move away from the yearly opening price, the more likely it is we're going to retrace to it. I've seen it usually later in the year, but just be mindful of that. Now, our 31 week low is all the way down to 36.62. And again, that 31 week high, 44.29. That's crazy, but for this week, 43.67 is the level that we want to watch. Now, again, when we break this down, we're looking for indicators that are warning signs. Once again, There it is, the medium term crossing the long term predicted difference. That neural index surprisingly has gone off first in this particular case. So if this cross completes, we could see a corrective move. Now, here is what I will share with you. What I have seen with this MA diff is that it has been highly effective with the S&P 500 on longs. On shorts, it has struggled to some degree, and that's because I believe that this market is so heavily manipulated, or people are siding with the Fed, that they're not going to raise rates anytime soon, and it just keeps pushing stocks higher. This past week with the Fed, not a lot different. So it recovered. But we are getting a warning sign that yes, the uptrend is still in place, but what we've got to look at here is a potential corrective move back down to 43.67. That's what I would anticipate is likely going to happen to start the week into Monday and Tuesday. We'll see where we're at on Wednesday. But again, if that dollar gets a boost this week, as it normally does in the week of the non-farm payroll number, because people are again, they buy the rumor, they sell the fact. They're actually buying hope. They hope that that non-farm payroll number is going to be very strong and it's going to change the Fed's mind, and that's going to boost the dollar. That may happen here, guys, but this is one stubborn Fed, so I don't think so. I think that whatever that number is, the Fed is going to say it's transitory, but again, we will see. For now, stocks are firm. 43.67 is the level we want to watch. If we click on our F8, you can see that we're struggling to hold above this blue line. That key level, the vantage point level, 43.99, okay? We have actually closed below that on Friday. So we're going to be monitoring this level very, very closely at the, let's just round it out to the 4,400 mark. If we start breaking down below that, then we're likely going to get a bigger move to the downside. And of course, the same thing when we look at the S&P 500, we want to make sure that we understand the main correlation, the big correlation that this one has, which of course is light sweet crude oil. Now, again, with light sweet crude oil, we keep making new 31-week highs. Now, I could go back in the Vantage Point indicator, the 52-week look back, but that is modified, and in the coming weeks I'll show you different ways again to use that, because again, if we look at we go into our properties and we look at that 52-week look back, there is some very interesting things you can do here. Now when we look at that, you can see I can set the number of periods to whatever I want, so I can go 52, I can go 2, I could go one, to start the week. There's a number of different ways that I could actually do this, and it is extremely. I can also do that with again, the point in time. And one of the tricks I like to do with that is on the weekly. The weekly opening price is almost as important to me as the yearly opening price. I like to combine them both. But when we look at oil, oil is a fresh buy signal here. So we're starting to extend higher. What we want to do is identify, again, where we're at here, guys. So 72.14, we're looking for that level to hold. We've got a fresh buy signal on here. Our predicted differences are really moving and there's good separation here. The slope is good, everything is good, but again, it's the week of the non-farm payroll number. Oil will succumb to any sell-off in the S&P 500. Oil will likely follow. Now, as we move into some of our Forex pairs for next week, which is obviously my bread and butter, the key markets that I do, we look at the Euro US, the number one traded pair. Now, with my own direct client base and in the Vantage Point Live training room, we're really only been looking at longs on this for some time now, for a couple of weeks, because I anticipate that this 31-week low is going to hold at the 117 mark, and there'll be a buying opportunity. But the direct correlation when we break this down that we really want to understand is that gold is always playing a part in this in some way, shape, or form. Could be a gold stock, it could be a gold ETF, but you notice here on the quarterly, you've got all of these. You've got Yamaha Gold, Equinox Gold, K stock. The common denominator here, guys, is gold, right? And the inverse correlation again is down here with the dollar index. Now on the yearly, that those intermarkets change to some degree, but the dollar index is a constant. It's always pretty much there. And we see that this euro up here, once again, this I really love the way that whoever wrote that Vantage Point article stated that these intermarket correlations can immunize you from fake news, from academic opinion. The intermarket correlation, this is a machine, guys. There's a 98.45% positive correlation between the euro and gold. So with that 98% correlation, I've discussed this also in the VP room where we've done a form of naked trading where we're looking solely at these intermarket correlations and the key vantage point pivot areas. Now, if the euro was going to come under pressure, it would be this week for a couple of days because of the non-farm payroll. We have verified resistance, and that resistance is coming up way up here. That's coming in at or about this high of 118.95. We need to clear it, get above it, then we should easily be able to target the high of 119.75, but we need the support of gold. So we need gold holding the line. Gold is likely to come under a bit of pressure with the non-farm payroll coming up, but the week after next, I would anticipate gold would extend its gains, regardless of that payroll number. So once again, we will watch these key levels. The Vantage Point major support level now on our T-cross long is 118.37. When we click on our F8, we want to get as close to price as we can, and we can see that the long predicted is 118.40. We know exactly where that is. So for the start of trading on Monday, we then can look at the predicted low, and it's at 118.36. So if we combine those two pivot areas with the predicted low, it tells us exactly where to pick up longs here, guys, when we connect the dots between all of these. Again, the market structure or profile of this market, which I showed you in the 9-month time frame, it favors the euro. And one of the big things that is helping the euro is gold's recovery. Now, the same thing inversely helps the Swiss franc. As gold goes up, that also puts pressure on the dollar and it benefits the Swiss franc. We see the exact same thing happening here. Now we've got our again, we can bring up our 52-week high, or excuse me, our 31-week high and our 31-week low. I'm really stumbling on that one. And then our market price on open, which of course is 88.37. So in actual fact, as bearish as this chart looks, we've been above the yearly opening price for the entire calendar year. It's actually been quite strong. We're making a higher low here, so that looks pretty good. So again, we're going to see if we can break down or even test this verified support low at 89.26. That is in the crosshairs right now as we continue to move lower. But again, we need assistance from gold to continue to extend higher to help push this pair lower. The key VP levels for this week, 91.42. That's the level you want to watch. Short, we stay short as long as we're below that particular level. If we break above it, that will likely come. You will see the medium term crossing the long term predicted difference, and that will warn us that something else is happening here. Now, with the pound dollar, again, we can see the market structure of the pound dollar on a 9-month basis. So when we click on this once again, we can see that our 31-week high, 142.47, and our 31-week low is 134.36. This yellow line, this price on open is close to the yearly opening prices I can get. So it can tell me that 136.65. Now you remember, I think it was last Monday or the Monday before that, where OPEC came out over the weekend and caused this massive 2-day crash in the pound dollar. Now, what I had stated on here, what I'd stated in the Vantage Point live room, is don't buy into this. That the British pound has a very, very high intermarket correlation to light sweet crude oil. Oil rebounds, which we know it will. In summer driving season, there's no way they're going to give us a break at the gas pumps, guys. This is a repetitive pattern. You can call it a seasonality. I'm cool. I'm okay with that. Call it whatever you want, as long as you identify it. So oil rebounds, stocks rebound, pound dollar goes higher, US CAD goes lower. It's exactly what happened. But these intermarket correlations are a form of naked trading that tell us that we should be focused on a rebound in those other markets. And this is a buying opportunity. And it was one heck of a buying opportunity. So when we look at this right now, the pound dollar for next week, we can get our pricing right here, 138.44. We're looking for the market to hold above that. When we look at the VantagePoint predicted low for Monday's trading is 138.40. That's a reasonable area to continue with longs. Here's where my concerns lie. As we zoom this chart in a little bit to look at this closer, we can see that predicted difference, that slope of that medium-term predicted difference is not overly bullish. It still is. We're above the zero line, but this is warning that it's coming into corrective territory. Our neural index is picking up on that and it's starting to slip again. So I would suspect that we are definitely going to come down to 138.44, but we need to hold above that level. So watch that level very closely. You can also use your F8 and you can get in even closer. The long predicted 138.78. These are two main pivot areas. If we crash lower, they will become your resistance for the week. That's what you want to keep an eye on. But again, watch these predicted differences to see if we get across or not. Now, with the dollar yen, once again, the structure of the dollar yen, the yen is really is not done well. But this again brings gold into play. There's a very high correlation, positive correlation between the yen and gold. So as gold tries to recover, you can see that the dollar yen no longer extends. So it really is going to be watching gold prices, this pair, the currency traders should be watching gold very closely. If gold tanks, then the dollar yen is going to reverse here, guys. But when we look at our 31 week high and low, we're playing a very, very big range on this thing. 111.66 to 102.59 with the price on open on the year, 103.17. I don't know if we'll get down to 103.17. It certainly is possible, but we're going to need gold prices moving. So once again, when we take a brief, deeper dive into this, when we look at some of these markets, and we can go into the monthly, we can go into the quarterly, we can look at all through these, and these inverse correlations, you can see that you've got Barrick gold. You're going to have a number of different gold and any kind of mining stocks tend to be in there, but the Japanese yen futures contracts obviously are big ones. The treasury bonds play a part, but these inverse correlations are very, very important to us, guys, because they give us a lead signal as to which way this thing is going to go. And again, the structure inside the neural networks, when we look at this from the futures side, these are some of the bigger ones. You can see gold, the euro, the dollar index, the Nikkei, the Japanese yen, the 5-year T-note, the 10-year T-note, natural gas, light sweet crude oil. This is what it looks like, guys, inside of a neural network. Very, very important that we look at this. So again, our resistance to begin the week is 110.02. We're going to see if we can get back up above that, but in my respectful opinion, we would need a breakdown on gold below 1790 in order for this pair to actually recover. Now, as we look at some of our main equity slash commodity currencies, the US CAD, we can see the structure of this particular pair. And again, when we look at it from this perspective, our high for the 31 for the year period is 128.81. Our low 120.07. So a pretty big range here for US Canada on the years so far, about 800 pips. Now, our T-cross long is 125.11. We've broken down below that. That's our resistance to begin the week. If we're holding below that, then we can expect US Canada to move lower. My forecast for the year end on US Canada, it's a little far out. I don't like to do that, but I'm looking for around the 120, 122 mark is where I would probably put US Canada. Because Canada usually does well up until about November, and then that's the end of it. So we'll watch these key levels at 125.11. Our predicted differences are still firmly lower, so I would be expecting it. But again, even if the US dollar strengthens here with the payroll number, in most cases, that's a positive for the Canadian dollar also. Remember, these two are the two biggest trading partners. So keep a close eye on this, but 125.11 is a key area. We click on our F8, we have that additional 125.04. So all of our main pivot levels are there. The high, we're coming in, the predicted high, 128, 124.84. So if you're, just remember, there's a holiday in Canada on Monday, so be mindful of that. And Canadian dollar is notorious for reversing around, reversing on whatever move it made on Monday, it often reverses on Tuesday. So we're going to move that out to Tuesday is the real trading day, Wednesday's the reversal because of the holiday on Monday. Now, when we look at the Aussie and the New Zealand, similar, almost identical trades, it keeps inching lower here. Now, when we look at this again on the broader market profile, the high 80 is around the 80 mark, the low 72.89 from a 31-week period, with the price on open around the year at 77.13. So again, still looking rather bearish. And here's my concern with this pair, is that our medium-term predicted difference, we can now zoom in on this a little bit, excuse me. And we can see that we're trying to get above the zero line with the medium-term predicted difference, but now we've got that reverse check mark again, and it's pushing back down below the zero line. We've hit into the Vantage Point resistance area 2 days in a row, unable to get above it. So our resistance point, the T-cross long at 74.03, is a major level for us. If we can break above that, and I've often discussed this in the past, what I will do is I will actually put limit orders just above 74.03. As soon as we get above it, it'll click in my long trade and I'm good to go. Because I think shorts are a little dangerous down here, but they are we are coming off a corrective phase with the predicted differences. But my bigger concern also, using that 31-week look back, this new low was just set a matter of days ago. So it's a little difficult to make a bullish argument on this particular pair at this particular time when we look at this structure, because again, the AI just simply finds that new low and then marks it. So be cautious with this one, and I would argue the same thing with New Zealand. You can see that our 31 week, wow, I'm really stumbling on that. Maybe I should have left it at 52 weeks, guys, because I keep saying that word keeps coming out of my mouth. But it's 31 weeks, and again, why I chose 31 weeks is I'm just trying to get near January 1st, the end of the year. December 30th, January 1st, just to mark where I am in this trading year, right? And this is what it looks like. So we are making new lows on New Zealand and Australia. We have the RBA, the Royal Bank of Australia, on I think it's Tuesday night, so be careful of that. It's going to be volatile, and it could boost the New Zealand. So if you get a very dovish RBA, that, believe it or not, New Zealand can actually benefit from that via the Aussie-New Zealand pair. But for now, again, our key levels that we need to get above is the 69.80 mark. And, I don't put a lot of weight on Friday's price here, guys. I really don't, because you've got a lot of profit taking. So we could see the Aussie recover, the New Zealand recover, and we could still see that broad dollar weakness. But I will be expecting some type of dollar strength this coming week. So with that said, this is the VantagePoint AI Market Outlook for the week of August the 2nd, 2020.